So how long do you think this dip is going to last? Because I assume you're not thinking of this as like a 6-month consolidation period like we had last year. Do you think this is going to be more flash crash style like COVID?
It could be. It could be both. I got no idea, right? I can't predict the future. I think if we were to go to 75, I really would prefer it. I think it would be a very good sign to see it really touching a hot stove, off it goes. That would be the preferred scenario. The deeper it goes, the sharper you usually want it to be. We will see over the coming weeks how this thing consolidates. As I said before, my break glass, everything is a disaster, bear market, 65K is kind of where I would expect that to find its level. So therefore, I can at least now frame that up and say, well, where are we now? What are my general frameworks for where I think it's going to go? If it goes to 65 and I was to buy here, would I be angry at myself, right? And that's how I like to think as a hodler. I've got my framework for where I think we're going to form some kind of a low. Therefore, I go, well, how long do we have here? If we go to 65, will I be mad? If we don't go to 65 and it just goes higher from here, will I be mad? And I make my decisions based on that framework.
And in terms of like the data that you can analyze, what are you kind of waiting to see now?
Yeah, I basically want to see short-term holders taking a really fat L. Right. So there's a tool that we use called SOPR, SOPR, stands for Spent Output Profit Ratio. Super powerful tool. Next to that, an MVRV, they are just they are my bread and butter metrics. Short-term MVRV, short-term SOPR. One of them, MVRV, tells you about how in profit, the unrealized profit or loss of short-term holders. SOPR tells you about how much they're locking in profit or loss. So my perfect scenario, I want to see short-term MVRV below 1, which on my charts would be nice and red, and we are there at the moment. That means the price is below their average cost basis, which means all the people who bought up above 90K probably feeling a little bit sensitive right now, right? Their incentive is going, oh God, what if it goes lower? I want to see the 2018 me. And this is what I talked about at the Miami conference. I showed the 2018 cycle. I've bought the 2017 top, and I showed what happened and then what SOPR was doing. And every time I was like, oh, cool. Bull market's back. SOPR was ripping higher, telling me that, well, now I know that the smart money was dumping on my head, right? And then every time I sold my coins and I said, don't worry, I'll buy it back later. I know I'm down, but I'll buy it back lower. I was locking in a fat loss at the exact time that the smart money was coming in and buying that dip. So I want to see short-term MVRV below 1, which it is. I'm a very happy sat stacker down here because that's condition 1. Condition 2 is I want to see the people who did buy high start panic selling low and taking a loss. That is currently happening. The deeper and the sharper and the nastier they look, the less likely I'm buying the top. That's how I think about these things. I hate buying the top because when I buy the top, I could have bought more sats if I waited like 10 minutes more. The more that this goes down, the more pain people are in, the more losses people lock in, the more likely, in my view, I'm not buying high. So therefore, over any kind of meaningful time frame, I'm probably going to be just fine. It's kind of that simple.
Do you have a chart in that slide deck that we can pull up to show that?
No, I don't, but you can jump to the charting website and you'll see it. Actually, we'll have a nice red print, I think, at the moment. If you go to charts.checkandchain.com, you'll be able to pull that one up. I haven't actually seen today's print, but I'm going to assume it's a nice fat red candle to the downside given yesterday's price action.
Okay, there we go.
There it is. So this is basically looking at the average profit locked in by short-term holders that are spending. So if a coin doesn't move, this chart has no idea about it, doesn't look at it, only looks at coins that are moving. And you can see that at the $100,000, $108,000 all-time high and in March, when we had the ETF peak, this thing was super high. Means that people are selling and taking fat profit. I'm not buying here. I'm going to wait. And once that thing goes red, that means that the people who did buy those coins, they are now capitulating and taking a nice fat loss. There's plenty of times where this thing also tells you, by the way, you're in a bear market. It's going to be red forever. Enjoy. See you in 4 years. But, the start of a bear market often looks just the same as the bottom of a dip in a bull. Around all the other things I look at, I would be very surprised if we're in a 2-year bear market from here. I'd be amazed. Can it happen? Of course, right? I'd love to be wrong in that instance because now I can learn from what I got wrong. My base case is we're probably going to bounce higher at some point in this year. Therefore, I'm a very happy stacker below the short-term cost basis, which is 92.
It's interesting to hear your